Guys, in this video, I'm going to explain how banks are actually reaping you, how banks are actually making profit off you. I get it. So what I'll try to do is that I'll try my best as possible just not to make this video to be too long, okay? But before I start, I would like you to watch this clip I'm about to show you up here. Just watch this clip, then I will come back and explain to you how banks are reaping you. Watch, just watch.
When banks lend us money, we are in debt to them, and we have to pay them back. This is where money really gets made. Just like the goldsmiths, when a bank gives out a loan, they don't get poor. They simply type new money into your bank account. It's brand new money that didn't exist before. The only difference is that when you pay it back, the money gets canceled out, and the bank only keeps the interest. But with that loan, you paid for a new car, and that money eventually made its way to the employees at the dealership. Then, they spent that money, and it continued to create hundreds of new transactions, towering businesses, creating new technologies, and providing us with food. All of this value and productivity would never have happened if new money hadn't entered the system. The problem is that productivity doesn't necessarily increase when we create new money, and that can cause inflation. If society starts producing fewer goods, but more money is added into the system, prices will go up. So there is more competition for fewer goods. Because of this, banks have to limit how much money they create.
Now, I want you to listen to me and listen very well. Now, this is how the banking system works and how they are being repaid off you, okay, as their customer. Now, first of all, you need to understand that in the banking sector, we tend to put our money as customers with the mindset that we want to save with the bank. Now, what the bank actually does is that the bank takes this money, okay, and keeps it, and thereby giving you charges for keeping your own money with them. For example, you know the card maintenance fee, the VAT charge fees, and so many of them. Even monthly charges for just keeping your money with them. Even the interest they have been giving, like the quarterly and the yearly interest. If you notice very well, most banks have stopped giving interest to their customers. So, putting money in your bank doesn't necessarily mean you are actually saving. If you use that word saving, if you use that word saving, you are actually misunderstanding the concept of the whole thing. They use the word saving to make you think you're actually saving, but you are not actually saving, you're actually losing money to inflation. Take, for example, you happen to save your money this year, okay? Let's say you were able to save up 100,000 this year. I bet you the next coming 3 years, that 100,000 that you save will not be able to get you what it used to get you now. Take, for example, back then, let's say 5 to 10 years back, people actually buy people actually do things just for 100,000 naira. When you hear 100,000 naira, you will see that people's mind will be blown away because 100,000 is a big money as of then. But now, if you tell somebody what 100,000 can do for the person right now, the person will even be like, will be laughing, like will be angry to your face. Like, bro, what are you saying? What is 100K? 100K can't do anything right now. So, putting your money in the bank, thinking your bank will make more money or will keep your money safe means you are okay. You are not really okay. See one thing about inflation. Inflation does not allow money to stay in your bank. Inflation does not allow. You might think that 100,000 you have in your account today will still be the same in the next 3 to 4 years. I'll bet you that it will not be the same, okay? Whereby prices of goods and services are increasing every day, but the naira in your bank account is devaluing, losing value, losing its purchasing strength, losing its purchasing power. That is called inflation. So the bank, what the bank does is that the banks are making money off you by taking percentages. Now, that interest rate they used to give you before, they are the ones taking it. If you ask me now, how are they taking it? I'm going to tell you, it's very simple. They are taking it through lending and borrowing. When they lend you money, right, that capital that they gave to you, let's say the capital was a capital of 10,000 naira. Now, that capital of 10,000 naira, when you borrow it from them, you are going to pay back. And guess what? You are not paying back that money the same way you took it. But rather, you are paying back that money with what? Interest. So, in this case, when they lend you money, and you have to pay back. You have to pay back with the interest. So what they now do is that they will now cancel the money that they have lended to you. Now that interest you give to them is what they profit from. Now let's say the money that you need, okay, you need it for a particular project, or you want to buy a new car, and you decided that, okay, let me borrow loan from the bank. Let's say you want to buy a car of 1 million, for example, and you borrow a loan of 1 million. What they actually do is that they will send you the money, they will transfer the money to you. Take note, this system is everywhere. It's a global system that all banks operate on. They will send you the money, okay, to your account, or they give you in a form of bill. But let's say they sent you the money in your account. This money are what? They are printed money. They are printed in thin air. This money are being printed in thin air. So what am I trying to say here? I'm trying to explain how the banking system works, so that you understand, so that when you keep saving, you start to question what you are actually getting from saving, whether you're actually making profit or you're making loss. But in this statement now, I'm telling you that you are not making profit, sir. You are making losses, because what they do is that as they give you that money, you pay them back, you pay them with interest. Those money are printed money. I mean, the banking system are the only system that gives you money based on printing. Now, what happens is that when the economy of a particular country, let's say Nigeria, for instance, gets weakened, what they do is that they just say, oh, no, the economy is getting weakened. What do? They go to CBN. CBN will say, print more money. So when they continue to print more money like that, what happens? The cost of goods will definitely continue to go up. So when the cost of goods continue to go up, what they are trying to do is that they are just printing money to meet up with the cost of goods. Listen to me. You don't need to be an economist to understand economics. You don't need to be an economist to understand the economy. Okay? So you just need to understand this. Get the understanding. Keeping your money in the bank does not save you money. Please take note of this. There is more to this. Like, I think I'm going to make a part 2 of this video, so that I'll make you understand more reasons why keeping your money in the bank is not a sure bet. I'm not saying you shouldn't put your money in the bank, no. But I'm saying that keeping your money in the bank does not mean you are saving your money. It simply means, instead I keep them for my house, make thief am. Make I put them for bank, make bank dey thief am small small. Thanks for watching this video. Follow, share, and like. Don't forget to subscribe.